This is a tutorial on the California Residential Purchase Agreement and related forms, and we'll go through the entire packet of the RPA and the forms that come along with it. First, I want to say if you are considering a 100% commission brokerage, please do consider OpenHome. We offer unlimited transactions and no limit on the sales price for just $300 a month as a monthly fee. That's it. There's no other fee involved, no transaction fee or anything else. There's full broker support, and your E&O insurance is included at no additional cost. So if you are interested in learning more, please do visit openhometeam.com/join. All right, so we'll start here with the disclosure regarding real estate agency relationships. And we're going to scroll down to the bottom. It's a 2-page document, but we're only going to worry about page 1. And you're going to put in your buyer or buyer's names here. When it says agent down here, it gives you a hint. This is actually the company you work with, the brokerage. So you'll write your firm's name and the company license number here. Now next to buy, you're going to put your name, which prints up here. You're going to sign next to buy. And then you're going to put your personal license number here. And you'll see this is a pattern throughout the form that the form's going to ask for you to distinguish between your company license number and your personal license number. So the buyers and you are going to sign this form. Here's the second page of it. You do nothing with the second page. It's all boilerplate text. Then the possible representation of more than one buyer or seller. This is kind of similar to the last form, but you're just going to put in your buyer's information and then as much information about the seller and the listing brokerage as you have. I imagine you'll have the listing brokerage's name, the listing agent's name. It's going to ask for you to distinguish between their two licenses, which can be looked up on the DRE's website, dre.ca.gov, and or on the MLS. You can find it there as well. And then for the seller's name, you can either look that up on Realist. So typically on the MLS, the APN number is hyperlinked. And if you click on it, it'll take you to the to Realist, and you can look up the owner of record's name, or you can ask the listing agent, or you can just write owner of record and update it later. So we're going to write that information in here. Of course, it's just the buyer and you signing it when you submit the offer. Then the wire fraud advisory here, same idea. Buyer's going to sign, just acknowledging the risk of wire fraud. Here we are finally arriving at the RPA itself. This is the California Residential Purchase Agreement. You'll put the date here that you write this offer up. And then you're going to put your buyer or buyer's names here. You're going to put the property address, the city it's in, county, zip, assessor's parcel number, which can be found on the MLS or in Realist, or you can even go to the county's website and do a search of the address and typically find the parcel number. Now, if for some reason you can't find it, it's not the end of the world. You can leave that space blank and address it later. On line C, you're going to enter the text value of the purchase price. Actually, when you fill this out in zip forms, all you have to do is put the numerical value here, and it'll automatically create the text value. We're going off a PDF that I created with sample information, but once you type in 800,000, which is just a sample number I made up, the system will automatically create the text value. And it's written twice just for clarification purposes. Close of escrow shall occur. You can check this box and write in a definitive calendar date if you want, or what's pretty customary is just checking a box here and writing 30 days or 45 days. Those are the two most common escrow periods. Then down here, we're going to confirm again who the listing brokerage and listing agents are, who the selling, well, now they call it buyer's brokerage. The selling agent and the buyer's agent are one and the same, but that terminology is confusing. And one of the updates of this form was changing selling broker to buyer's brokerage firm just for clarification, because you have seller, which is listing, and selling, which is buyer. And that stems from just the way it's written in terms of the law, and it's a legal definition, but it's very confusing because people often call the seller's agent the selling agent, which is incorrect. So you're going to put that same information that you entered earlier of who's the listing and who's the buyer's broker, and then all the respective license numbers here. This is all pretty straightforward stuff. Now with finance terms, you're going to put the EMD, earnest money deposit, on 3A, and it's typically 1 to 3% of the sales price. Since we're doing a made-up sales price of $800,000, we just put 1% or $8,000. Now by default, it says that the buyer is going to wire it. If they're going to drop off a check, let's say the buyer's going to drive a check, it can be a personal check too, over to escrow, just check that box right there. If not, it's expected that the buyer will wire it within 3 business days. And we'll scroll down. Now, if it's an all-cash offer, just check that box C. If it's not, you're going to put the loan amount here. Now, in this case, we're pretending that the buyer's getting a loan for 80%, which comes to $640,000. That means the buyer's putting 20% down. So what happens is we're going to put 80% or 0.8 times 800,000 right here. And that's the loan amount. And you can confirm with the buyer's lender if there's any confusion. Depending on the type of loan, you can write in FHA or VA, and you can put in a rate. You know, often agents leave this blank, and it's fairly harmless because it complicates things to put a interest rate there that could be a term of this contract, because rates do change and fluctuate. And so you can leave this blank, or you can write in the highest rate the buyer is willing to get on their loan. And if you have any questions, just talk to the buyer's lender. We're assuming it's a conventional loan, 80-20, and so that's why we put the 80% here. Now, automatically, your form is going to calculate the remainder, which is line F, that the buyer has to bring to escrow in order to fulfill their entire down payment. So if you add up the $152,000 plus the $8,000 of the EMD, that equals the $160,000 or 20% down payment. And if all these numbers are coming out too quickly, just know that this will all balance out automatically. You just basically need to know how much the deposit is and how much the loan amount is, and then this number on line F gets calculated automatically. And it'll also automatically calculate 800,000 because all the numbers above line G, if you add them up, the earnest money deposit, the loans, and the remainder, which is the remainder of the down payment, that should all equal the sales price. So that should match the sales price above. And the buyer's going to initial this page like they do every page of the contract. Now we scroll down here and you'll see that the address has carried over. So with an offer, you really should send a pre-approval letter from the lender or a proof of funds. You don't have to, because there's a line here that says that the buyer's agent will submit proof that there is enough money, proof of funds, to facilitate the transaction, and that the buyer can get a loan within 3 days of acceptance. That is a term of this contract right here on line H. But proper form would have you submit that in advance. You should submit that with the offer. Your offer should be accompanied by a pre-approval letter and a proof of funds for the down payment or the entire amount if it's a cash offer. Automatically, the buyer is going to have a 17-day appraisal contingency. If it's a cash transaction, you can check the not box to remove that contingency. There's also a loan contingency here for 21 days. Now, if this is a cash offer and there is no loan contingency, just check this box on line 4. All right, moving on. There's a lot of standard verbiage in here that is not necessarily worth discussing in a tutorial on how to write an offer. My hope is that you'll go through this. You can go through it multiple times if there are certain sections that you want clarification. And if you do have questions, of course, you can respond to the information in this video, and we'll put some information how to contact our company, or you can even post your question in the comments, and we'll answer about the form. Now, if there is a contingency, you'll check this box here, and this, of course, is if a buyer needs to sell their current home before they buy a new home, and that's in the case that the buyer may need to put their home for sale because they need the proceeds from their current home they're living in before they can afford to buy this new home. And so that's why you'll see concurrent closings, things like that, where the the buyer might tell the seller, hey, I'm closing on my current home a week before we're supposed to close on your home because I need the money, the equity from my last home to buy this one. That's another situation, and that should be addressed on a car form COP. But we won't go at length in it here because you'll want to look at a car form COP to address that. Now, if another form does come up, you can always check a box here or and indicate that it exists. So, for example, there's an addendum. There really shouldn't be an addendum unless your text overflows on an RPA. So if you have more than what you need to write on just this form, you can add an addendum. But any other terms should be countered back and forth by the parties. You can check the box other and write in if there's another form that you need to add. Or you can write other terms. This is just a blank auxiliary area where you can write in anything that comes to mind. Allocation of costs. So we have that the seller shall pay for an NHD. Now the NHD, natural hazard disclosure, cannot be waived. This must always be obtained by a seller. And so typically the seller will pay since it's a seller obligation to disclose. Termite, once upon a time, termite was automatically incorporated in a RPA. There was a whole termite section, but years ago that changed, and the reason was that parties were agreeing to termite repairs before they knew the extent of the repairs, which was essentially a blank check that the seller was signing for termite repairs. So it used to be a seller would agree to termite repairs in the RPA, and then when the inspection comes back in the middle of escrow, they find out there's $30,000 of repairs or even $15,000 of repairs, but it's a lot more than they had expected. So termite got removed entirely, and if termite's not mentioned, and you can see here on line 7A2, I wrote termite in. The reason is that if you don't write it in, then it's up to the buyer to go get a termite inspection on their own. The seller has nothing to do with it. But in this case, we're asking for the seller to pay for a report. We're asking for the seller to get a termite inspection. And this is customary. And I put prepared by buyer's choice because termite companies, I like to say that if you order 3 termite inspections, you get 3 fairly different reports. And so this gives control in terms of which company the buyer may have to deal with in the future. But people often write seller's choice here too. It doesn't matter that much. Now, we'll move down to government retrofit. The seller, like furnishing a natural hazard disclosure, is required to make sure the home has smoke alarms and carbon monoxide detectors. This is not something that the seller just can waive. And I see that happen on occasion. And this is an obligation between the seller and the state, not the seller and the buyer. The buyer is not to tell the seller that, hey, just don't worry about that. And a seller is kind of reckless to do that, even if they did, because even if the seller tried to put it on the buyer and not make sure there are smoke alarms or add a smoke alarm if it was missing, what happens if the buyer's in there doing repair work and there's some sort of accident or some gas burning appliance is leaking and causes someone to get ill or hospitalized? I mean, if anything goes wrong, as unlikely as it might be, then the seller could be liable. And because people will look back and say, well, why did that home sell when there was no carbon monoxide or smoke detector in it, or the water heater wasn't braced? And if the seller says, oh, the buyer didn't want it, or we agreed not to, someone might say, well, that's an obligation by the state of California for you to do that. Anyway, so the seller needs to check that box. I mean, the buyer could theoretically pay for it, but it's kind of silly for the buyer to install that in the middle of escrow on a property owned by the seller. That also creates liability. These two get unchecked, and I think the way that it's become this kind of habit for agents to uncheck the boxes on, this is 7B2 and then lines 2 and 3, actually 1, 2, and 3. You have to understand that certain cities do require government inspections, and sometimes there are retrofit standards required by a city, and you should really take into consideration what city you're in, because if you leave that unchecked and then the particular city that you're in says we need to do an inspection, before you close escrow, who's going to pay for it? That has to be renegotiated, which is a pain in the neck. And what if there is some sort of retrofitting or unpermitted construction of some sort on the property, and the city cites the seller? I mean, and the seller, they could go back to the buyer and say, hey, I didn't agree to pay for it because you left that blank. So if you want this home, then it's your responsibility. I just think that that you should take into consideration what requirements there are by the city, and you can look this up fairly easily before you leave these blank. But I think it's good form for a buyer's agent to just check the seller boxes on this whole section B right here. Just check the seller boxes all the way across. Now, escrow and title in Southern California, there's what's customary down here, and then in Northern California, it varies by county. And then actually, even there are customary differences in different parts of counties. And we have a matrix. It's a spreadsheet that shows what's customary for each county in California. But speaking just for Southern California, because that's uniform, in Southern California, buyers and sellers typically each pay their own escrow fee. And then when it comes to the owner's title policy, the seller pays that. And that's what's customary for down here. Of course, that's totally different in Northern California, but there are so many different scenarios that it's just easier to use Southern California as an example. Also in Northern California, usually title and escrow are the same. In Southern California, they're not. They're usually separate companies, which I think is a bad idea actually, but it's just the way it is. It's just kind of how the industry works down here. But at any rate, you'll write the name of the escrow company and the title company on these lines as well. If you have any questions, by the way, on the allocation of fees and who pays what, or you want a copy of that matrix, that grid that shows what's customary in each county, go ahead and visit our website or email info@openhometeam.com. And same with these other costs. These two are I'm putting in what's customary for Southern California, but Northern California, it's wildly different depending on the county you're in. So we have the seller to pay for the county transfer tax, the city transfer tax, if applicable. Some cities have it. Interestingly enough, when I'm recording this in 2020, some cities are proposing raises on their city transfer tax. Let's see, sellers typically paying the HOA transfer fees. And really any fee relating to the cost of HOA certification, transfer, document preparation, etc. Those fees are usually borne by the seller. There's private transfer fees are fairly rare, unless this is maybe like a rural property or there's some sort of special arrangement. I would say leave this blank or write in a not applicable. And then if you want, you can use one of these lines like in D8, 9, and 8 or 9 for whatever purpose you want. I mean, you could actually charge a transaction coordinator fee to your client, or a commission fee to offset your costs to your brokerage. That's another conversation, but very seasoned agents will often do this. They'll put in the buyer shall pay for transaction coordinator fee of X amount of dollars payable to whomever. And that'll help offset your costs as an agent to perform the transaction. And then here we have the home warranty. Now this box isn't checked, but almost always the seller pays the home warranty. So you would check the seller box. We put in $600. You'll want to look up what the cost is based on the size of the home that you're writing an offer on. But you can kind of ballpark it. $600 is fair for a home that's probably around that price. I put First American just because I like using that company, but you can use whatever company. And check that box, air conditioner if there is one, or pool and spa, or other if there's some other. Maybe let's say you want roof coverage or something, you can put that there. But really the person that orders it gets to decide how the coverage is. So whenever possible, try to order that home warranty. If the buyer's not going to get one, they can just click buyer waives the purchase, and it implies the seller doesn't have to pay for anything. Now, anything that's a fixture to the home is included in the sale. And so here there's all sorts of just basic standard verbiage, which is good. And I should mention that window coverings, which include curtains and blinds, all that stuff, that is included with the property. Sometimes sellers take those, but they should not. And the stove needs to be checked if the stove's going to stay. The refrigerator needs to be checked if that's going to stay, and same with the washer and dryer. And any additional items, like let's say you want a flat screen that's on the wall to stay, you need to write that in here. Is the brackets will stay, but the TV won't. So if you have any questions on this, I just recommend really reading this section a couple times so that you understand what it all entails. This lease section addresses things, namely solar panels, which are leased and have kind of been a area of contention because the buyer has to know about them and usually get pre-qualified by the solar company, or I should say approved, to take over a lease. All right, if the buyer intends to occupy the property, don't check anything here. If this is going to be an investment property or left vacant, check this box, does not intend. Buyer's going to initial again. And here we have more boilerplate verbiage that, I mean, you can skim through it. A lot of this is just required by the state of California. Seller has 7 days to deliver disclosures from the time of acceptance. So the seller needs to make sure they have all their state required and brokerage required disclosures ready within 7 days of not when this offer was drafted, but 7 days of when the last party signed off on it. And then we're going to continue on. And let's see, more boilerplate verbiage, quite frankly. Buyer's going to initial all this. You know, they put the inspection contingency down here in 14B separate of the appraisal and loan. I mean, I understand that inspections are different than financing, but it's a little confusing. But this is another very important contingency for the buyer. So the buyer has 17 days to do their inspections, and if anything's off, the buyer can back out and their deposit's refunded. And so if that's going to change, you can put in a different number here if you want more or less time for your buyer. You can remove contingencies with the offer. That's a high risk, highly advanced move. Keep in mind, however, that the buyer can still back out even if they do this within a couple days of getting the transfer disclosure statement from the seller. So it's not a 100% ironclad because there is that transfer disclosure statement loophole, but this is more for a cash investor that doesn't care how terrible the condition of the property is. They'll check that box right there. Again, I do not recommend it unless it's an advanced cash buyer that's highly, highly experienced. Most of this is just boilerplate verbiage. You know, I can tell you by being a broker for many years that a lot of this verbiage is either notices required by the state of California, or when disputes come up in the future, the parties typically will have to go back to the purchase contract and say, well, what does the contract say? And there's many different variations and possibilities of something that could come up as a dispute or a misunderstanding. And all this verbiage is good to have in place so that you can come back to it as it relates to whatever's being disputed and realize that there is verbiage that protects the parties or answers the question. So there is value to this. It's just in terms of going through and writing an offer, there's just have peace of mind that it's there, but it's nothing worth getting too hung up on. All right, and we're going down. Now, I do recommend parties do initial here. This says that the parties, so this is liquidated damages, of course. This is just saying that the buyer can lose their deposit if they remove all contingencies and fail to close escrow. Any reasonable seller is going to demand that this is initialed. Down here, this is saying that because we're talking about page 8 of 10, which has really, this page has 3 different initial areas on it. And so both parties will initially top initials, and then the second set of initials says that they agree to go to mediation instead of straight to court. And if mediation doesn't solve their problem, then the parties will go to arbitration. And so they're going to sign or initial there for that mediation arbitration clause. Now, sometimes parties can waive it. I don't recommend it, but by not initialing there, it allows the parties to go right to litigation to sue each other in court if anything goes wrong, rather than trying to find a less expensive, amicable way to resolve the issue. So that's why I recommend initialing here and then the third set at the bottom of the page. Now we're closing on page 9 of 10. This is where the buyer's going to sign. If the buyer's agent wants to make this offer expire sooner than later, they can change it here and just check a box and put a time of day and a date saying that this offer will expire sooner than the third day after it's signed, which is the standard verbiage here, saying that this offer basically lasts for 72 hours, more or less. But that's the default. If you want to accelerate the expiration, you can just check that box and write a time and date here. Buyer's going to sign. Seller is going to sign here if they accept. If they want to counter, they need to check the box and still sign, because the signature is required, but the seller needs to check that box and say that there is a counter offer. And then you, as the buyer's agent, you're going to sign right there. You're going to fill out this information here and try to fill out as much information here as possible. It helps escrow. It helps everyone identify who's involved. And then the buyer is going to initial page 10 just because there's no other place. The buyer's already signed their final signature on page 9, but they need to acknowledge receipt of page 10. So they initial down here. Buyer inspection advisory. This is just good measure saying, hey, buyer, be aware that you need to look into all these potential issues that could come up. So please investigate as much as possible. Buyer's going to sign there. This is a newer form, Consumer Privacy Act Advisory, one of the zillions of disclosures we have in California that, of course, this just talks about your privacy as a consumer. Buyer signs there. I wouldn't pay it much mind. It's just a standard form. And that is it. That is the RPA in a nutshell. If you have questions, email info@openhometeam.com, and I do hope that you found this tutorial helpful. Thanks.